Oil prices are almost at $60 a barrel. We haven't been there since December 2019. And I wouldn't be surprised if by the time this video ends, oil will be $60 a barrel. I'm Sean Pruitt, president of Kingdom Exploration. If you're interested in oil and gas news, if you're in the oil and gas business or you're an oil and gas investor, this is the channel for you. Please subscribe. I'm not a journalist. I'm in the business and I read a lot of news. I've been reading news about the oil and gas industry for years. And so I just share what I learned with you guys. Brent crude right now, $59.63. WTI crude, $56.85. Oil prices rally towards $60 a barrel. You're going to see hundreds of articles saying the same thing over and over again. Contributing to the gains were a government report that showed another draw in crude stockpiles, optimism over a speedier U.S. economic recovery on the prospect of additional stimulus from Washington, and a successful rollout of the U.S. vaccination program. OPEC Plus maintained its oil output policy. At a meeting on Wednesday, a sign producers are happy that their deep supply cuts are draining inventories. Okay, and that's their whole goal. They want to drain the oil glut. Okay. And the tighter the markets are, the higher oil prices can go up. Okay, that's why oil prices skyrocketed over $160 a barrel in 2008, because the markets were so tight and they dropped the bomb in the Middle East and bam, it's crazy. Crude inventories fell by 994,000 barrels in the week of January 29. And analysts got it wrong. They said they're expecting an increase, a rise of 446,000 barrel rise. That's a difference of 1.5 million. Okay, I'm seeing that consistently. Okay. People are they're extrapolating based upon what they think COVID's going to do, the economy's going to do. And so far, they've been getting it wrong because there's been a negative sentiment for a U.S. recovery, a negative sentiment towards the oil and gas industry. They're getting it wrong, okay? Refinery crude runs fell by 80,000 barrels per day last week. Utilization rates rose 0.6%. So we're seeing a decrease in production, increase in usage, in demand. Speculators less pessimistic about U.S. economic outlook. The outlook for the economy has improved recently as progress in coronavirus vaccination moves by U.S. President Joe Biden to pass more physical stimulus, and improving economic data is encouraging aggressive speculators to add to their already established bullish positions. Okay. Now, I don't normally read the trend indicators analysis, but the trends that I'm seeing, they're expecting oil prices to hit around 67.56 for this bull run. Okay. So this is current U.S. production. Okay. Right now we're producing about a little under 11 million barrels a day right here. Now, if you look here in 2017, we're producing about 9 million barrels a day, and we skyrocketed all the way up to roughly 13 million a day in 2019. And that was mostly due to the shale revolution, the fracking revolution. And now what the indicators are saying, the trend indicators are saying right now, we're seeing a decline. And this is what all of the trend analysis and all the models are saying. We're going to see a decrease in production, and for good reason. In 2008, we were producing about 6 million barrels a day, and it was steady production because it was conventional. Okay. Now, most of the oil that we produce today in the U.S. comes from a formation called shale. Shale is a very tight formation, incapable of extracting a barrel of oil. Okay. But because of fracking, we can extract oil from shale. Now, the problem with fracking, it's very expensive. So it's the most expensive barrel of oil to produce. Okay, that's number one. Number two, the decline curve is massive because when you use artificial stimulation to get oil out of the ground, Mother Nature always wins, and it goes back to what she was programmed to do, which is stay tight and don't produce anything. So you're going to see a massive decline because they had to spend billions and billions of dollars to not only maintain production, but also increase production. Okay. So they were throwing a lot of money at this thing to keep this thing going. But at the end of the day, without billions and billions of dollars, which that's what's happening, all those funds dried up, you're going to see a massive decline very quick, faster than you've ever seen it before. And so all the models are saying, hey, get ready for a decline in production and less oil, higher oil prices. So oil prices supported by a tightening market, increased risk appetite. Oil prices were on track on Friday to post their third consecutive weekly gain. This week's gain would also be the largest weekly increase in oil prices since October last year. The price of oil has rallied by more than 50% since October after vaccine approvals and rollouts began in November. Okay. So here's the thing, guys. We are on path to see oil prices hit levels that we've never seen before. You can't have the whole world jump the oil and gas ship and jump on the green bandwagon with all these false hopes, dreams, and expectations without seeing oil prices skyrocket. We need oil. Everybody kept saying that the analysis we're getting, the analysts were getting it wrong. Everyone expected COVID to destroy oil and gas demand. Shale oil and gas industry is following. The banks have stopped funding them. We need shale oil. We need to produce more oil, and we are declining at a very rapid rate, and it's only going to increase. The mess that we will be in a year from now, 2 years from now, we can't come back from this. It's going to take years and years to build up our infrastructure to start developing more oil and gas. Our rigs have dropped down to levels that we haven't seen since I don't remember. The current administration in place is putting policies in place that makes it harder to develop oil and gas. They're putting policies in place that forces countries to get away from fossil fuels. And what is that going to do? It's going to reduce the amount of money you invest in oil and gas, whether it be through the stock market, whether it be in, drilling for oil, but everybody's jumping the oil and gas train. And so production, you're going to see a massive reduction in production over the next 2 or 3 years. And what's going to happen? The Middle East is going to become very rich because somebody has to supply the demand for oil. And when everybody finds out that green tech cannot replace a 150-year-old grid, we're going to be in a huge mess. And the Middle East is going to be here to save the day. We don't have enough oil coming from Canada, thanks to Biden for shutting down the Keystone Pipeline. We don't have enough oil because of thanks to Biden for shutting down the federal lands and leasing for the oil and gas industry. And we are going to be in a situation where Russia and Saudi Arabia win. Thank you, Biden. All right, guys. I'm Sean Pruitt, president of Kingdom Exploration. Again, if you like this channel, please subscribe, and we'll talk soon. Thanks.